Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 25th of April 2018. This is Jens Klatt speaking, exclusively presenting to you this format here for JFD Brokers as their global head of research and education. And sure, we want to have a look at the developments in the market. And in fact, the tide has turned, let's say. So yesterday I was quite optimistic that there will be a push back above 12,640, 650 points, a push back in the daily chart above the 200 simple moving average. But, and this is the thing, it didn't happen. And not only that, but in fact, the US equity markets saw some serious pressure, which pushed us below 12,500 points, and currently we are not only breaking this level, but also we fell below 12,400 points. So the market really keeps on taking on momentum on the downside, and so now the question arises: what happened there? I mean, what's the reason for this quite significant push, and what to expect in the near term here after this push lower? And so first of all, I'd like to say that even though that looks very, very strong bearish somehow, and there was a quite huge acceleration into the evening yesterday, nevertheless, I think if this continues and the main driver continues to play a quite important role here, and here looking at the yield markets, what I can say is that then there is some potential serious pressure which is potentially pushing the DAX even significantly, probably towards the region around 12,000 points. So right now, everything's still fine, even though the overall picture does not look good at all. If you have a look here at the hourly chart, you can clearly spot that the sequence of higher highs and higher lows is broken with this break below 12,370 to 400 points. This is, by the way, also a level against which potential short engagements could be considered. Yes, even though so far nothing is lost, but if we make it down to 12,250 and if we fall below that level, I think a very weak weekly close is ahead of us, and the push towards 12,000 points is definitely an option. Yeah, the main driver for this could definitely be the ECB tomorrow, and here the question still is out there: will the ECB come out more dovish than expected? Will they come out dovish at all? I mean, when looking at the euro, and also when looking at the attack of the highs here from last week, the attack yesterday here of the region around 12,650 points, the attempt to make it back above this yellow line, which is the 200 simple moving average. And also on top of that, when looking at Euro USD, which pushed towards 122 here on the downside, and nevertheless could hold this level here so far, well, it seems as if the market is at least anticipating a more dovish Draghi tomorrow, and hoping for some hints, speculating to see some hints, let's put it that way, that the ECB probably will give it at least a try to down talk the euro to compensate for potential negative impacts, tariffs from side of the US, respectively a trade war in general could have on the euro economy. And probably they're not arguing that way, but probably they will come out with something like saying, hey, you know what, I mean, we see still some diminished outlook for the euro inflation, or the inflation in the eurozone in general, and that's why we think it's one of the main drivers potentially the euro, which has strengthened over the last 12 months here after the election of Emmanuel Macron in France. The overall political landscape stabilizing. Also, after here in Germany, we've seen a new government forming. So all in all, we should definitely consider bringing putting some pressure on the euro, since the current value of the currency is weighing negatively on our inflation. Probably that's some kind of way how they probably communicate this and to try to down talk the euro. If they do that, I mean, this is definitely something which could then drive the DAX higher and would definitely 100% contrarian towards my bearish outlook, which I just made a topic here at the beginning of this webinar, when I said there could be a drop below 12,250 points and a run down towards 12,000 points. But, and this is the case, will the ECB deliver exactly what I just presented here? And this is the main question. So, and if they do not come out here like that, and if they reformulate the status quo, well, then the pressure on the euro, I'm sorry, not just the pressure on the euro, but the demand for the euro could rise again and drive the DAX lower, and probably playing some kind of, let's call it catch up here with the US equity market. So now the question arises, what do I mean by playing catch up with US equity markets? Have a look here what happened yesterday. So the Dow Jones dropped sharply, 700 points within the day. The S&P 500 was an awesome market yesterday for ORB traders, so meaning open range breakout traders. And why do I say that? Well, what do I mean by that? Well, the pressure which formed here and the strong trend which built was something which really showed that there was some good trend which could be caught here yesterday after the breakout of this open range. And so looking at this development here, looking at this move lower, there arises the question: okay, what happened there? What's the main driver for that? And I think the main driver can be found in the yield markets yesterday, when 10-year Treasury yields pushed back above 3% the first time since 2014. So here, have a look at this chart, and you can see it here. So that was the last time we traded around 3%. In fact, I'd really love to go back a little longer, to be honest here, and see when the last time was that we traded around this level. I can imagine it to be going back towards 2011 probably, I'm not sure. But this is the thing. So what happens here right now is potentially the markets reducing their equity long exposure and rebuilding based on the more attractive interest rates occurring right now, building up yield long positions, or let's call it a yield long position. So meaning buying treasuries here and reallocating their portfolios. I think this is the very good way to call this what's happening here. On top of that, this also should be something which is very interesting to note here. There's, as you may know, a strong correlation between the yield markets and the volatility markets. So this said, it means that usually with rising yields, volatility starts to rise because it becomes more attractive, and markets usually tend to gain some momentum in one or the other way. So meaning there's some bigger chance that trends develop here based on carry trades being brought up, respectively reduced or unwind here. And so usually with rising yields, also volatility rises. So now the interesting thing is that especially risk parity funds are probably getting some or seeing some trouble, meaning they build a position which was aggressively equities long while shorting volatility. At the beginning of February, we have already seen some kind of, let's probably call it mean reversion taking place here. And now with yields keep on rising here and pushing above 3%, such a reallocation of portfolios becomes again a topic, meaning reducing equity long positions and buying back volatility here. So while risk parity funds, for example, shorted volatility and bought aggressively equities here, especially probably in the technology sector, and here so the so-called FANG shares become, or the FANG basket becomes a topic. FANG consists of Facebook, Amazon, Apple, Netflix, and Google shares. All these have seen some serious pressure yesterday. Nasdaq in general has seen some pressure. And this is exactly something which is currently driving the markets. So since this is, it's not necessarily only tied to the US equity markets, nevertheless, it's probably something where you usually expect a bearish outperformance to happen in US equities here compared to its European counterparts. But if the ECB does not come out as dovish as expected or anticipated here, again, this is where European equities, in this case the DAX, could play catch up here. And ECB, which reformulates the status quo, not giving any hints towards a more dovish stance in the near term, this is exactly something which could then aggressively sell or result in more aggressive selling in European, in this case also German shares, and which could drive the DAX significantly lower, and where currently it doesn't look like, but it could become a topic that if we go below 12,250 points, that there will be an acceleration down to 12,000 and probably even below that level. And that it's possible that such huge sell-offs happen, as something you could see here at the beginning of February. If volatility continues to rise, if there is this reallocation, there's a continuation in this reallocation taking place, well, this is something which could then mean that in this case the DAX should be seen quite bearish into the next days. And there's also something I'd like to mention. So the 1st of May is a bank holiday. It's next week on Tuesday. So what we are about to see is a so-called, not so-called, but it's a prolongated weekend with a potential day off on Monday too. So it's not that markets are closed, but probably some market participants will just say, okay, I skip Monday. And then I return next Wednesday, meaning that I could imagine markets to thin out in terms of liquidity, and this could also get troublesome for in this case European shares, because this could drive markets even more significantly lower if liquidity thins out more dramatic as probably expected right now. And if you combine all this, you see that the overall picture has definitely took a beat, let's say, took a beat here, and with the with this not making it above 12,650, but instead this bigger sell here, which took place yesterday, I could imagine the sell to continue. Again, by the way, when looking at the ECB, and another potential bearish driver could be the outlook for the euro, because what happens if the ECB does not come out as dovish as expected? Well, look at what happened here over the last days. I mean, you can clearly spot market participants selling the euro, and this is most likely because they are anticipating a more dovish ECB. If the ECB does not come out as dovish as expected, market will most likely find support against 122 here, and then find a stronger push back here, which could bring us back above 2250, but probably more significantly, probably higher towards 124. Yes, this is a definite fact. Markets still or already quite long the euro, so I think that the potential is capped on the upside. Nevertheless, it's definitely something to consider, and if the euro strengthens, this is something which could also weigh on the DAX then, and result in some bearish and some bearish price action in the upcoming days to happen here. Make long thing short, come back to the DAX once again. I'd be really careful in terms of long engagements currently, but think we're not yet done on the downside. Probably we'll now make it, if at all, towards 370 to 400 here as a potential short trigger, but all in all, the overall trend is most likely to continue. And by the way, when looking at the Dow Jones, you can also spot that we're again trading quite closely towards the simple moving average 200 here. There were slight already attacks at the beginning of April, for example. If we now make it below that level, there's further room for another 500, 600 self on the downside intraday, which is also something to consider when looking at European shares or European equity markets here, in this case the DAX. Yes, let's have a look at pound sterling. Quite interesting that after this push lower, for example, here, the market now has started to stabilize. I'm not sure whether I want to be aggressively long pound sterling. Still, I'm really not sure, but I could imagine if probably the continued the momentum the US dollar has taken on here starts to diminish a little, and we fail to break it to break above 91.30, 91.50 at the first attempt here. I could imagine that probably pound sterling, after the losses of the last week, is probably about to see some significant pullback, which could bring us back towards 140, 150 here for this region, even though that's not biting up things here from a technical perspective. But the thing is that short-term traders are probably willing to take long engagements, which from a risk-reward perspective are probably worth considering. And if we make it above 140 again, I think a push towards 140.50 is probably a good chance. And you have also a clear stop level, which you can find here on the downside at 39.20 around. These are the lows here from April, and the lows from this week. And below that level, there's further room on the downside. But as long as you trade above that, there's a chance for a retracement given, definitely. And finally, let's have a look here at the dollar Japanese yen. Also something which is very interesting to note. So currently, the main driver seems to be the yield market. And based on that, we know of the strong correlation of 10-year yields and dollar Japanese yen. If yields rising, dollar Japanese yen is most likely to rise too. The interesting thing here is that, and this is something which underlines that it's so far only a reallocation. It's not that the market is seeing some kind of risk-off move. Nevertheless, it could happen rather sooner than later that the market is becoming skeptical, nervous, and if risk-off becomes a topic, then the Japanese yen has some serious potential to see a bigger reversion of the gains of the last days in dollar Japanese yen in this case. So, said that, be careful taking on long positions right now if risk off really spreads around the markets, over the markets, which is not a topic yet, but could become a topic quite soon. Well, then dollar Japanese yen probably sees a more and stronger reversal, which will bring us back towards 108 and probably below that. Which, from a technical perspective, then first of all, it's not more than only a retest of the breakout level, but something worth considering here, and to be careful about when you're currently trading the long side in dollar Japanese yen. Yeah, and that's from my end. So I wish you all the best. Happy trading. Take care. Talk to you again tomorrow at 9:30 a.m. GMT. I definitely look forward. And if you have any questions, please shoot me an email. I'd much appreciate to answer it. And yeah, that's it from my end. So all the best. Happy trading. Take care. Talk to you tomorrow. See you and bye-bye.